Hey, very good morning to you traders. Mark here from Daytrading Room. Time is 10 past 11 in the morning London time on a Tuesday. And just reviewing trades and looking over this Fed trade again and again and again. And you know what? It's time to put it onto video. I'm sure that you're going to get some takeaways from this because of the mistakes that I've made and the way I've traded it. And ultimately, analyzing our mistakes, excuse me, is sometimes the most powerful way of improving our trading. And even after, what is it now, 13 odd years of trading, as a human, you're going to make mistakes. We're not robots, but I think the important thing is that recognizing you're making the mistake and just cutting the trade quickly, or if it's a series of trades, just stepping away very quickly. That's the difference between a mistake costing you a lot of money or digging you a big hole over several days or weeks, and stepping back, reassessing and coming back in, putting it to one side and making it insignificant in the scheme of things. So let's talk about Fed Day. Fed Day, we all know what happened. If you're trading, you know what was going on with the taper, or no taper, should I say. We've got to reprice the upside, and when I talk about a reprice, what I generally mean is some news that comes out that changes the short-term valuation or the perceived short-term valuation of the market. So in this case, looking at, we've got the Dow here, YM, we popped up from what are we here, 420 straight up within a minute to 560. So a decent pop, and I consider that a reprice. Now, I've been waiting for Fed for a long time, and my plan was laid out. I knew exactly what I was going to do under various circumstances, when I was going to stand aside, when I was going to trade, which direction I was going to trade, what I was going to do in the first 5 minutes, what I was going to do in the first half an hour, what I was going to do in the subsequent till 7 till 9 p.m. closing period. So that was all pre-prepared. But actually what happened on the day was I traded it completely differently, and I made several mistakes. I'm going to run through those now. So this is really a textbook scenario for me. It's a reprice, as we just talked about. It's a push up. It's a pullback that doesn't encroach too much. I don't want it encroaching into the second half. That's probably the maximum you'd want. Maybe a little bit more is okay. Ideally you want it sort of flagging right at highs. That's the very best, but they're never always textbook perfect. But anyway, regardless of that, this is a nice flag after a push up, only encroaching into sort of the first third of the move. So it's good, and I look to buy the retrace, or I look to buy when I see a tape flurry to the upside. I'm looking to buy that. And stops wise, I'm looking to come out if it fails pretty much immediately, or working a stop under the flag low, depending on how far away that is. That looks feasible there. Target wise, scaling some out into the break, always taking some out into the break, especially when there's sort of ridiculously high tick readings, 1380 there. So a good place to start scaling into this candle here, and then holding some, looking for the rest of the move to be the rest of the day to be a trend day. That's generally what happens on a reprice situation. The rest of the day will close at an extreme, unless it's a full scale reversal. And obviously you're going to manage the risk. If you've got a decent cushion, you're not going to let it go against you, and whatever happens, it should be a profitable trade. That's the theory, and most of the time this is my preferred setups. I'm happy to do these with a larger size and all those good things. But for whatever reason, today, or Fed Day, Wednesday, I made a mess of it. So let's bring in the blotter, and we'll talk about some of the trades. I'm going to talk about a gold trade as well that I did, but for now I'm going to talk about this Dow trade. So I went long 5 lots, 87.4, and 91.4 was the average, with all the fills involved. So 10 lots, that an average between the two. And here's the chart. Here's the lines here that I've drawn here. You can see where I bought them, around here and then around here. Now, looking at that now, I'm cringing when I just see that level of buy. Why is that such a bad place to buy? For whatever reason, I missed this pullback. I was trading gold. I hate using excuses for stuff. And I don't want to use an excuse. It's a missed trade. Whatever the reason is, it doesn't matter. It's a missed trade. But for whatever reason, I didn't buy this pullback here. I think the best place to buy was this opportunity here, as the volume was rising, as we started to break out of this little congestion area here. and then looking for the break to new highs, and then holding some. And really the whole point of the reprice trade is that you're taking some off the table and then you're leveraging on that to try and get more meat and then maybe another 100-point move. But we'd already pushed up once, we'd failed, we didn't really push that much higher. 60 to 90, it's only a 30-point move higher. Then we rolled right back to the break point, then we started to push again. And for me to buy the second break, when the first break wasn't even that aggressive, I can just see it's a bad trade. It's a bad trade. The odds are against you from the start with that. By all means, buying in pullbacks. By all means, buy the first break. Because you've still got that surprise. And this is hung around for quite a few minutes. So that's possibly what I was thinking at the time. I was thinking, I'm not sure I like this, and then further on, I sort of thought, okay, I will take it. And when you get that indecision, you end up making bad decisions. But I prefer to see it flagging for not very long before going again, and that's perfectly valid. That's perfectly valid. And then a subsequent number 2 pullback, you're looking then to buy there, and being prepared for it to fake out and maybe do a bit of unwinding before going on further. You get the idea. It's a bit of a scrappy drawing, but you get the idea. So I brought the break there, but actual fact, the tape reading saved me in this trade. There's no doubt about it. I took it. There was a burst of volume coming through, and you can see it there. I'm buying 5, buying another 5. In my head, I'm thinking, okay, if I can get a good move up there, what I'll do is I'll maybe take some off, then add another 10 and try and build the position up as the market goes, and that's fine. But in reality, when you're taking a step back and looking at the chart, in the cold light of day, you can see why such a bad trade, such a bad place to be initiating a trade. Tape's all very well, and the tape read was accurate. Because I managed to get out. The exit was just at the top here when I realised. I'll bring the blotter in so we can see. 96 and 89. So this little peak here, and then as it rolled back to around here, just realising pretty much within the first minute that this was a bad trade. But the tape actually saved me, because as it pushed up, I saw that tape, we got that little burst, but when you're looking at the big picture, you've got to use tape reading in conjunction with the bigger picture. And the bigger picture, in my eyes, which is a 30-minute period here we're looking at, was not a place to be buying. Regardless of what the tape says, it doesn't matter, because the tape can be strong for another 30 seconds, and then all of a sudden you're going to hit that brick wall of selling, and it's going to become weak. So you're using the tape as a very, very short-term tool to get your entry. And you can see here, that's exactly what I did. I looked at it. The break happened. I front-run the break, but the fact that it was the second one in, the fact that we'd not been very strong beforehand, really didn't lend itself to exploding higher. But the point is, I recognised that, and within a minute, 2 minutes, thought, you know what, this is a bad trade. Ditch it, get out. So I cut some at the high, obviously just pulled the stop up to break even plus a bit, and thinking, okay, I'm not going to do any damage now. That's the main thing. Let's just limit the damage, limit that risk straight away, and then we'll see what happens. We could get a little drift up, and obviously it came back out and stopped me out. So that really... It was a poorly executed trade, despite being planned out, despite being exactly what I'm after. For whatever reason, it was a mess up. But the takeaway is really understanding when you've made a mistake, and if you manage to get that little leg in using the tape, then that gives you that cushion to recognise, hey, you know what, this is a bad trade. Let's just clear it out, start again fresh. And yes, it's disappointing, because I've been waiting for that for a long time, and ultimately I would have liked to have built a position, on this pullback low here, then add some more on the break, maybe scale a bit out, hold a core, sit through these retracements, adding a little bit, and being positioned larger size as we got the full move. But it wasn't to be. That's the way it is. Mistakes happen. Very quickly, I'm going to talk about this gold trade. This was far better in terms of a reprice situation. I'm going to bring the blotter in here. I bought 2 contracts at 42.2 and closed those out at 47 and 47.4. So this is it, basically. We've got the push up here, we've got the little retracement. There's a little seller sitting there at about 41, which I saw on the tape. As soon as we broke through him, I'm buying. And don't forget, gold, the ATR on the size of the contract, 2 contracts is about equivalent to larger size on the Dow and the ES. So you've got to watch out for your contract sizes on that. But the play for me was only going to be the pullback. That's much nicer in terms of a reprice type trade, and the one the two, the three, one, two, three, the small retracement really high up, seeing there's a little tape seller there at 41, so I'm working off him rather than a tape buy. I'm looking at the tape whether it's going to be a buyer I can work off or a seller to lift, a buyer to hold or a seller to lift, looking for the long. In this case, the seller lifted, so we took the long there, and it just exploded straight away. It went to highs, and the exits were 46.9 and 47.4. So a quick trade, a textbook trade, and that worked out okay. But disappointing on the Dow. So these are the results of the trade. The Dow, I got away with that. It was a bad trade, and to make a small, scratch profit on it is a good lesson. You have to take those and say, what, it could have been a lot worse than that. It could have gone against me immediately. I could have been stubborn with it. I wouldn't have been stubborn with it because I've learned that lesson many years ago. But when you've got a mistake, you've taken a trade, you realize you've chased, we're going to do it. We're never going to make perfect trades. And in the heat of the moment, it obviously didn't look like a chase to me. It looked like a good trade, otherwise I wouldn't have taken it. But sometimes taking a step back, recognizing when you're in the trade, even 30 seconds in, 10 seconds in, this is a bad trade. Don't give this any room. Cut some, whatever you need to do to reduce that risk and get rid of that mistake, then do it. And gold, despite being the smaller position and despite being what I considered not a better trade at the time, was the more profitable. It was in a couple of contracts, and it was a shame that it wasn't on the Dow, and I didn't get that with a decent size. But hey, that's trading. That's just the way it is. So interesting takeaways I think from that, in terms of recognizing mistakes, understanding we're never going to be perfect despite having the most textbook possible setup out there, and recognizing we're only human, but making sure the mistakes don't turn into a ridiculous account damaging horror of an error. Cutting it, forgetting about it, moving on, and then you can review it with a little bit more clarity and calmness because it hasn't done any damage to your account. It's a mistake. You can chalk it up, you can learn from it, and then next time you get that set up, you can recognize if you're chasing or whatever the mistake may be. So main thing is keeping that risk managed and good trading, guys. And I shall be back with another video when I find something that's of interest, both mistakes and good trades. Take care.